Okay, it's 11 a.m. here in Melbourne, so let's get started. Hello, everyone, and welcome to another quarterly update and Q&A brought to you by the team at Apollo Crypto. I'm Henrik Anderson. I'm the co-founder and CIO, and today I'm joined by Pratik Kala, our head of research and portfolio manager. And for anyone new, Apollo Crypto is a multi-strategy investment fund manager, and we're headquartered in Melbourne, Australia, and we invest globally. We have now 8 years of successful track record. We have 3 active funds and a tokenized strategy, and we are solely focused on managing portfolios of crypto assets and strategies on behalf of wholesale investors, family offices, and fund of funds. Thanks very much for everyone attending today. We do hold these webinars on a quarterly basis, and we also publish a weekly newsletter along with long-form quarterly research. And you can head to our website at apollocrypto.com to subscribe to our newsletter if you're not already subscribed. And you can also find previous research and blog posts on our website. A reminder that the purpose of this webinar is to inform our investors and followers and to provide a general update on the crypto markets and our funds. And this is a general discussion and it's not to be taken as financial advice. Please do your own research when considering an investment in the crypto markets. And as always, we are happy to take questions from the audience. So please submit any questions as early as you like through the Q&A feature, and we'll try to answer those questions at the end of the webinar. With that said, let's get started. So today we'll talk about Q4 and also the full year 2025. So the agenda is that we'll talk about 2025, our funds, we'll look at the fundamentals, and we'll provide an outlook in terms of macro crypto and our portfolio. And again, we'll end with Q&A. So again, please feel free to put any questions in the Zoom Q&A feature. So I think the market in 2025 was quite an eye-opener. And when we summarize the performance of the different sectors, again, it's pretty brutal for 2025. Bitcoin and Ethereum performed okay. Bitcoin was down 6% on the full year. Ethereum saw a decline of 11%, so modest declines for the 2 biggest assets in 2025. But when you look at the top 400 crypto assets in the market, the median return was minus 79%. So I don't think many people actually realize this, but a very, very brutal year with only a few assets that outperformed. And if you look at the graph on this slide, you can see the performance of various sectors within crypto markets. File storage minus 75%, perp is minus 79%, DePIN minus 82%, gaming minus 86%, and so forth. So really difficult year for a lot of assets in the crypto markets, despite kind of the good news we had from a regulatory standpoint. And we also had other assets performing better than crypto in 2025. So we'll come back to why we think this is and how the future looks in our view. But I think this boils basically down to that it's becoming more and more important to be an active manager in this space. This has been our thesis for a long time now. And I think this really is playing out. It doesn't work to kind of have a more passive approach where you kind of index the top assets in this space. As you saw on the previous slide, the top 400 median return was minus 79%. So that doesn't work. The market is becoming more and more mature. There's an increased focus on the fundamentals. We are more and more looking at things like revenue, buyback, burn, actual usage. And when we look at that, it's very, very clear to us that the sector that really matters in crypto is on-chain finance, or what is also called decentralized finance. That's where you see the revenue, where we see the real adoption. And selective assets are doing really well. It's hard to find them, but we think we have a strong portfolio. One example is Maple Finance. Maple Finance, despite the market was up over 100% in the calendar year 2025. And that is driven by fundamentals. So on the chart here, we see the TVL growth for Maple, and it's been growing since the start of 2025 at 500 million to close to $5 billion, almost a 10x in terms of value that is locked in Maple Finance. Maple Finance is a yield project, on-chain credit protocol that belongs in the DeFi bucket. And they grow tremendously in 2025. They also grow fees. So fees is kind of their income, if you like. They grow that from 12 million in the beginning of the year to a run rate of 58 million at the end of 2025. Actually, those are the figures for 2024 and 2025. So we believe it will be even much higher in 2026. They also announced that they are initiated buybacks in 2025. I think they're using something like 25% of the revenues to buy back the Syrup token, which is their native token. So that also helped support the growth in the price of the token in 2025. So that's an example of how there's the feedback loop between projects doing really well when it comes to revenue, growing, value locked, doing buybacks, and so forth. And that creates the price performance that we saw in Maple Finance. So that's our job as a fund manager, to find these kind of tokens that see this kind of real momentum. And we have a number of vehicles where we invest in crypto markets. So our longest running vehicle is the Apollo Crypto Fund. It's been around for 8 years now. We don't have the full year 2025 figure for the fund yet. I hope that will be released this week. But up until November, it had a performance of minus 22.6% for 2025. Since inception, it's been compounding at 18.5% per year. And the purpose with the Apollo Crypto Fund, which is an Australian unit trust, is to create this one vehicle if you want exposure to the crypto markets. It's a diversified but also a concentrated portfolio, betting on what we believe are the best fundamental cases out there in the crypto space. And it's the vast majority of the fund contains liquid tokens. If you want to find out more about the Apollo Crypto Fund, you can go to our website and get in touch with us. But it's a liquid fund with monthly liquidity, and that's the case for all our offerings at Apollo. The next one that I will mention is the Apollo Crypto Frontier Fund. It's a higher risk, higher reward type of fund. This is a Cayman fund, which only invests in altcoins. So it excludes Bitcoin and Ethereum. That's what makes this fund unique. Again, the vast majority of the tokens are liquid, and we have monthly liquidity when it comes to subscriptions and redemptions into the fund. And of course, 2025 was a difficult year. I mentioned before that the median return of the top 400 coins were minus 79%. The Frontier Fund did minus 38.2% in 2025. It's a higher volatility fund, and it's a US dollar denominated fund. And you can see some examples of the investments that we currently have in the portfolio. Maple Finance that I mentioned and talked about. Solana, which is kind of the main blockchain outside Bitcoin and Ethereum. Hyperliquid, which is a perpetual DEX. It's a type of trading engine that is becoming very popular and profitable. On-chain, Aave, which is the biggest lending market, and Sky Protocol, which is the largest decentralized stablecoin project out there. So those are some of the investments in the Frontier Fund. I'll move along. The next one that I will talk about is the Apollo Crypto Market Neutral Fund. Had a really good year in 2025. The fund was up 16.8% net of fees. This is a very different fund than the two previous funds that I talked to about. This is a market neutral fund, which means we use stablecoins to create a very consistent return in the fund. In 2024 and 2025, we didn't have any negative months in the fund. So it's been performing really good. It basically deploys the stablecoins on-chain indexes and lending markets to obtain this kind of return with minimal counterparty risk or credit risk. It's a BVI fund that is denominated in US dollar as well. So if you're looking for very consistent returns, not the volatility in crypto, this fund might be for you. And I should mention this is an award-winning fund as well. We received the prize as the number one risk-adjusted return in the crypto asset space in 2025 for this fund, number one in APAC. The final offering that I will talk about is a tokenized strategy that is called mApollo. It's a tokenized strategy that is issued by a company called Midas Software. It's a tracker certificate, and it's kind of a similar strategy to the market neutral fund on the previous slide. So the aim is for a very consistent low volatility return. You can learn more about mApollo on the Midas website, and the URL is there on the slide, is midas.app/mApollo. And by tokenizing a strategy, you enable things like lending in DeFi, so you can do more once you have the token, but you need to be comfortable holding a token in your wallet, so you need some experience from Web3 or crypto to do that. And it's available in selected markets, and you can read more again on the Midas website. With that, I'll leave it over to you, Pratik.
Thanks, Henrik. So I think a lot of people have on their minds the question of why did crypto underperform in 2025, right? I mean, there has never been a time where the headlines were so favorable and so positive, but the price performance of crypto as an asset class, focusing on Bitcoin to start with, has underperformed. Now, with hindsight, we have three primary reasons, and we will discuss each one of them on why crypto has underperformed, and also looking into the future on where we are on each of these reasons. So the first reason is that the original holders have sold with both hands. So the activity from original holders that have held Bitcoin for 7+ years went through the stratosphere in 2025, and there were a lot of those holders that have decided to sell in 2025. Now, there's a couple of reasons for that, which we'll talk about shortly. The second reason is a lot of miners are pivoting to servicing AI workloads. So I think all of us already know or use AI on a daily basis. And what AI needs is a lot of data centers and a lot of energy and a lot of power. And Bitcoin miners were already ahead in this game for many, many years. And a lot of AI workloads and companies have approached them to use some of that capacity to service AI workloads. So in order for a miner to convert from an from a Bitcoin miner to service AI workloads and meet some of the performance criteria for that, requires a huge capex. So roughly 3 to 5 times more than setting up a Bitcoin miner. So in order to do that pivot, some of the miners have been selling Bitcoin on their balance sheet, and even Bitcoin that hasn't been mined yet. And we'll talk about how that happens as well. And the third primary reason is isolated bubbles and temporary leverage imbalances. So for people that are not tracking the market on a day-to-day basis, on the 10th of October, as it's called 10/10 within the industry, there was a huge flash crash within the entire crypto ecosystem that wiped out not only some market makers, but also a lot of the funds and confidence in the market around them. And so that's left their mark as well left its mark as well in 2025. So let's again individually talk about why are original holders selling now? Well, there are many reasons for holders to sell at this point in time, but the primary reason is because they can. If you look at this chart over here, the orange lines and red lines indicate holders of Bitcoin that have held over $100 million, or in some cases even over $1 billion, and the activity in 2025. You can see it's a lot of orange and red lines compared to even 2022 and 2023, when FTX and Genesis and the entire complex collapsed. So the question is, why are they selling now? Do they not believe in Bitcoin's future or the thesis? What has changed? Well, the primary reason that we believe they're selling is because for the first time in history, they can, and they can in volumes. So in 2024, the ETFs launched, and in 2025, 24 November, and after in 25 in Trump's year, a lot of volumes and activity started coming to the crypto ecosystem. So for the first time in history, anybody sitting on $100, $200, $400 million a bag of Bitcoin, so to speak, could easily execute in the market and realize some of the gains that they have been sitting on. A lot of these holders have held Bitcoin for 7 to 10 years, so a long period. And in their view, it was the perfect time to realize some of those gains. It was also possible to do it because a lot of banking deregulation targeting crypto had been lifted by Trump. So these people could finally move their coins, work with brokerages or other platforms, and sell in large volumes and cash out the money into their account. So one of the primary reasons is because they could finally realize the value of something that they have been sitting on for 7 to 10 years. So why is this healthy actually? So is this a net negative for the market or healthy? So there's a very popular blog post by Jordi Visser, which was titled "Bitcoin is having its IPO moment." Now, what that means is this is a completely natural phase of the market for an asset as it matures. If you look at any venture sort of deals as well, I'll take Facebook as an example because that's something that I invested in on IPO day, and the price collapsed 40 to 50% right after IPO. Now, why that is because there are many people that invest in companies or different assets and wait and are patient for 4, 5, 7, 8, even 10 years. And eventually, when they get their liquidity event, so when they can cash out, they choose to because their patience would then be rewarded. And in many cases, they're up 10, 20, 50, or 100 times on their initial capital. So Bitcoin had that moment in 2025 with a lot of volumes and deregulation and Trump coming in with the announcement that he brought in. So unfortunately, every time Bitcoin's price started lifting, we saw a lot of sell pressure come from old holders. But this is a completely natural phase of the market, and it is changing hands from the old guard that has been sitting and waiting for 10 years to a new cohort of holders, which propels the asset to the next leg up because the new holders have a higher cost basis. and have a different view of the asset versus people that bet many, many years ago. So we believe this is healthy, and it's a positive, net positive for the asset class that this has happened in 2025. Next slide, please. All right. And we will look at some of the fundamentals, right? So let's look at some of the many headlines that should have just taken Bitcoin significantly higher in everyone's opinion, but because it did not go high because of the aforementioned reasons. But let's revisit some of those fundamentals, because people focus on the price and forget everything that happened for Bitcoin in 2025, Bitcoin and crypto. I'll focus on the bold ones only because there was a swathe of positive news. Every month there was something really, really bullish for Bitcoin and crypto. But I'll focus on the positive ones first, or the biggest ones. So in March of 2025, Trump signed an executive order to establish a strategic Bitcoin reserve. This is still the most powerful country with the US dollars with the US dollar reserve currency, and they went ahead and blessed Bitcoin with a strategic Bitcoin reserve akin to Fort Knox and the gold holdings. So just putting it as the same status was a big deal. March. A whole bunch of positive announcements in April and June as well, including individual states such as Texas signing a strategic Bitcoin reserve. So not only at a federal level, but also at a state level, we were seeing some of these reserves come up. In August was a very, very big news and catalyst as well, which was Trump signed a pathway for crypto to be added in 401ks. For people that don't know 401ks, it's like the mandatory retirement system in the US, so tax efficient, somewhat like the superannuation system in Australia. So signed a pathway for crypto to be added, and it has trillions of dollars in the retirement plans at this point in time. So that was very, very bullish to open the doors to that. In October, Morgan Stanley, which is the largest private wealth manager in the world, along with UBS and Goldman, they set a 4% crypto cap for opportunistic portfolios. This was, again, the first time that a large wealth manager of that size set a 4% cap for crypto, which was very positive. Prior to that, just holding crypto was not advised by the bank, and advisors weren't allowed to allocate to it. Again, in October, JP Morgan, which has historically disliked Bitcoin, Ethereum, allowed it to be used as collateral. So finally, it becomes more capital efficient for people to hold Bitcoin, Ethereum, and crypto, as they can pledge it as collateral and go and do other things with it, whether it's buying a house or other assets. So positive coming specifically from JP Morgan as well. In December, Vanguard enabled clients to trade funds that previously banned it. So a lot of Vanguard clients, which is again one of the largest wealth managers in the world, could not access any crypto, but they lifted that ban, looking at the volumes and looking at the competitors' move. In December, Bank of America as well, which is the third largest wealth manager in the world, they also back to 4% crypto cap and removed any restrictions for financial advisors. And in December, Charles Schwab, which is one of the top 5 brokers with 50 million clients in the US, enabled spot crypto trading for all its clients soon. So we had many positive news, and I haven't even talked about all the positive regulatory news that came and supported the asset class. But unfortunately, the price didn't lift because of various reasons that we discussed about before. And so the conclusion for this is, when prices and fundamentals move in opposite directions, we believe, opportunities arise. And with this in mind, we are very constructively bullish for 2026. I think Bitcoin had its IPO moment, a lot of old supply coming onto the market. It's exchanged hands right now, and we should form a nice base and very constructively bullish because of all of these catalysts that occurred in 2025. And next slide, please.
You didn't even mention the Genius Act, which you have there in July, which was very positive as well. So that was more on the regulatory front. That enables basically stablecoins to be treated as money in the US, and we have seen a tremendous increase in stablecoin volume and value, which is at the record level. So stablecoin outlook looks really good, and probably will grow a lot from these levels.
Yeah. And so the million-dollar question after lackluster years, the chart in front of you is the performance of all the major asset classes globally from 2011 to 2025. In orange, you'll see Bitcoin. You can see it was a top performing asset for many years, and oftentimes flipped to the worst performing asset, at least in this graph, after every 3 years of superior outperformance. So in 2025, regrettably again, Bitcoin, despite all the positive catalysts, was one of the what lacked performance compared to other asset classes. So the question I think all of us can ask is, well, has something fundamentally changed for Bitcoin? Were all these large banks, whether it's Morgan Stanley or Vanguard or UBS or Bank of America, are they just lifting all their restrictions just because they want to, or do they actually see value in the asset class? Has the fundamentals changed for Bitcoin and broader crypto given what's happening in the world? We've seen gold do a ridiculous rally in 2025 and continue in 2026. Has Bitcoin's core thesis changed in light of that? We think not. If anything, it will. There's a strong belief. We believe that there will be a moment where the mainstream narrative and media is going to catch on to the fact that Bitcoin is solving all of the problems that gold solves, or silver in some cases, but in a far more effective and efficient manner. It has already been blessed by some of the strongest countries in the world, and there are already various different products in the world that people can use to invest into Bitcoin. So constructively, extremely bullish Bitcoin. Don't think anything fundamentally has changed. And the rest of the crypto asset class typically follows Bitcoin. We are seeing bifurcation in how Bitcoin behaves versus the rest of the asset class, because now revenue is finally coming in as stable coins have started proliferating. So we are entering 2026 very constructively. And as this chart shows, Bitcoin is an extremely reflexive asset. When it runs very, very hard. So I think if people have opened their charts and looked at Bitcoin and silver, it's 9 straight months, 11 straight months of just going up very aggressively, and the last month being the best. When Bitcoin runs, it runs very, very aggressively, and it leaves everything behind in dust. So it's been a 15-year journey already with Bitcoin, as you can see on this chart, and many years it has blown past every single asset class in the world. Fundamentally, we don't think anything's changed, and we think that that moment can arrive again in 2026, where Bitcoin rallies so hard that people are in shock and say that, wow, that's crazy that it's moved so aggressively. So constructively bullish in 2026, given everything and all the positive catalysts in 2025.
This chart really well illustrates the 4-year cycle as well that we have seen in the past. In my view, that is broken now, and the Bitcoin halving has less and less impact on the market going forward. Would you agree, Atik?
Yeah, 100%. I think the 4-year cycle is a relic of the past. It's just a coincidence that Bitcoin's price failed to rally despite all the positive catalysts. But the new entrants that are coming in don't have a concept of the 4-year cycle. So new institutions that are coming in, lifting advisor restrictions and all of that, they have no preconceived notions of 4-year cycles or any ideas of that. They look at assets independently and see the value and the value they can add to portfolios and invest accordingly. So that's a big chunk of the money coming into the market now, not individual retail. So yeah, I think the 4-year cycle is over.
All right, so let's move to the macro side here a little bit. Sort of the macro is important for all asset classes, including crypto, and probably more so than in the past, as crypto is becoming more integrated in the economy and in investors' portfolio. So when it comes to rates and growth, what we are seeing is that we expect the US interest rate to be cut further in 2026. So the graph here on the bottom is the expectations for the interest rates in the US by the end of 2026. And as you can see, the highest probability is for a rate between 300 and 325 basis points is currently at 350. So the market expect another 50 basis points cut by the Fed by the end of the year. Of course, there's a lot of uncertainty in that. But we can also expect a new Fed chairman. Colin Powell's mandate runs out at the end of May. So Trump is due to appoint a new Fed chairman that might be announced in a week or two. But we know that he would like further rate cuts, and he probably will appoint a Fed chairman that is in line with his thinking. So we can expect further rate cuts in the US. The labor market seems to be holding up fairly well, stabilized at this level. Inflation rate is still above the Fed target, but it's probably coming down, if anything. And the growth outlook is looking pretty good for the US. Q4 is expected to be very, very strong with potentially 5% growth in the US quarter over quarter. And estimates by market participants for 2026 GDP growth in the US has recently been revised up as well. So if that's the picture, it should be healthy for growth assets and risk-on assets. And I think crypto squarely falls in the risk-on asset bucket. So it wasn't the case in 2025 for the reasons that Pratik talked about. But if equities continues to do well in 2026, and crypto should also do fairly well, we believe. So I just want to highlight one of the strongest narratives in the crypto markets, and that is tokenization. Tokenization is the idea that basically all assets will be tokenized and coming on-chain. There is a big drive for this by some of the biggest institutions in the world, like BlackRock, but also by the US government and the SEC. They're talking about tokenizing and kind of revamping the financial system by enabling instant settlement and things like that tokenizations enable. And it is one of the fastest growing sectors within crypto currently. So the chart here on this page shows some of the different kind of sectors within tokenization. So on the upper left side is the stablecoin market cap, which is at an all-time high, supported by the Genius Act that we talked about earlier. But it's over 300 billion now in stablecoins outstanding. We expect this to go to $1 trillion in the coming years. As stablecoins will be used more and more for payments. It enables instant global settlement of payments and programmable money. On the upper right side is the tokenization of funds. So we have seen money market funds, for example, coming on-chain. They're currently $14 billion in those funds on-chain. The issuers range from BlackRock to Fidelity to Franklin Templeton and others. On the bottom row, you see a tokenization of commodities. Over 4 billion now, is growing very, very fast. Obviously, recently been driven by things like gold and silver and copper, which cannot be traded on-chain in a tokenized format. And it really enables access by anyone with an internet connection anywhere in the world. That's kind of the power of crypto. The last square there is tokenized stocks, which is also growing very, very rapidly. Around $500 million currently in tokenized stocks. And those are mainly traded on Ethereum and Solana. So that's another sector that is growing very, very quickly. And further to that, one of the big sectors in crypto is something called perp markets. Basically, you can think of it as an on-chain version of your crypto exchange like Binance or OKX, but it's non-custodial and it's on-chain and permissionless. And what we're seeing right now on the markets like Hyperliquid and Ostium is that more and more TradFi assets are traded. And I think this is really good to see because it means that value in TradFi is moving on chain. So it's fantastic to see that actually happen. I took this screenshot just from the other day. I think it was yesterday or the day before from Hyperliquid, and this is the kind of the assets with the most volume, and you can see a lot of TradFi assets there, not just Bitcoin and Ethereum, but assets like silver, um, stocks, which is the XYZ 100, gold, copper, and silver again. So I think that's pretty interesting to see. We also know that some of the more traditional or fintechs that are looking to enable crypto will tap into this kind of liquidity on chain. So I expect that to happen in 2026, which will further grow the on chain and the DeFi markets. Pratik, do you want to talk about the positioning of our portfolio? And then I'll remind everyone that they can ask questions as well as we will move to Q&A after this slide.
Yeah, thanks, Henrik. So the portfolio positioning is in line with our view at the end of 2024, which is we have a concentrated portfolio in high conviction projects with verifiable revenue and a clear product market fit. So the era of the sky's the limit, and we're going to onboard 100 to 100 million users of 2021 to 3 is over. Now I think the market is adjusted, and protocols that are showing tangible revenue and distributing it back to token holders are winning, and we're clearly seeing that in the market. So we continue to have a concentrated portfolio in our high conviction projects, and where we can verify the revenue, and that also has a product market fit versus something more ephemeral, which like meme coins that would come in and go out of fashion in a couple of months. We don't do that stuff. So we're focusing on liquid strategies rather than primary deals or venture deals because that's where we see the value at this point in time. We are generating superior yield on the majority of assets. So we are generating yields on Bitcoin, Ethereum, Solana, Hyperliquid, and we're generating more than the standard staking yield for some of these as well because of the tools and options that we have. Some of the selected top picks in our portfolios. The first one, excluding the majors, is Hyperliquid. I think this is a clear category winner, and it's buying back its own tokens very aggressively. A quick note on crypto being reflexive, right? So as we've seen Bitcoin, Ethereum's price be stagnant or lackluster for a while, Hyperliquid is impacted because of that malaise in the market as well in 2025. But if you pull up a chart of Hyperliquid, it's gone up 65% in the past 4 days. So the nature of the market is the asset class is extremely reflective, and when it starts moving, it moves extremely aggressively. And so we expect similar things for the majors as well. When they move extremely aggressively. So 65% in 3 days or 4 days for a multi-billion-dollar asset like Hyperliquid was phenomenal. Unseen returns. So hopefully that will reflect in the January NAV as well. Syrup, I think Henrik's already talked about it. It's growing rapidly as an on-chain finance protocol. Aave is the largest borrowing and lending market, so money markets basically on-chain. Sky, previously known as MakerDAO, is the largest on-chain stablecoin issuer and has very strong earnings, of which it uses it to buy back its own token. And Pendle is a novel protocol. Typically, only large, sophisticated quant shops or investment banks used products like these in-house, but now we have a decentralized version of this, which you could, fix yields on various different stable coins and, loop and do other things with their model. So Pendle's also, we expect that to grow aggressively as stablecoin and real world assets come on chain more and more. Finally, just a note there, we had no losses on the 10/10 event. So 10/10 flash crash, many assets dropped 30, 50, 70% on some exchanges as well. Some funds, regrettably, market makers, delta neutral funds were wiped clean, fortunately. So we're proud to have very good risk management, and we had no losses on that event. Stream Finance, for people that were following, was another large DeFi stablecoin related fault issue that happened. We had no impact to our funds with regards to that as well, or any other exploits. There was balancer and a bunch of other issues within the ecosystem, and we didn't have any of those things. So a testament to the team's risk management and experience in the space for avoiding some of these issues or trading on venues that frequent these issues. So yeah, I think we can go on to the Q&A section, and happy to hear any questions anybody has.
Yeah, sounds good. Let's see if you have any questions in the chat.
Yep, the first one, I can take it. It's asking, are privacy coins more correlated to gold? And is Bitcoin losing its perception as an inflation uncertainty hedge? So happy to answer that. Are privacy coins correlated to gold? No, I don't think so. Privacy coins had a very strong 2025, to everyone's surprise, really. The narrative, privacy coins have existed since 2015, 16. In many cases, they have been delisted on exchanges. They were delisted on exchanges, and governments and other sort of local regulators had banned them in the past. In 2025, it came back with a whoosh, and very rapidly, specifically Zcash, rallied, a 7, 8, 9x. The catalysts for that were predominantly 2 to 3 large influential people in Silicon Valley that started talking about privacy and crypto again. And so I think it's to be seen if privacy coins continue maintaining that momentum. Privacy is very important, but I think it's too early to draw a conclusion that it's correlated to gold or any other asset at this point in time. Zcash has its standard sort of coins, and it has shielded coins, which is the privacy preserving ones. And I think there's still a little bit of a technical hurdle for the majority of the world and or institutions to operate in that ecosystem. So still consider it very niche relative to that and not correlated to any other asset at this point in time. The second question was if Bitcoin's losing its perception as an inflation or uncertainty hedge. That's a good question. I think it's not losing its perception at all. However, it does trade frequently as a risk on asset. So despite inflation being high or currency debasement issues, we've seen gold and silver catch a huge bid, but Bitcoin has lagged in 2025. Is that perception changed? Are people abandoning Bitcoin as that currency debasement concept or trade and think that gold is superior silver? I don't think so. I think it was just a bad 2 quarters in 2025 because of old cohort selling. If anything, Bitcoin's ETF is BlackRock's most successful and most profitable product. And I think the sales machine of Wall Street is going to continue pushing Bitcoin as the alternate to gold and superior gold in many, many ways. So I think it's just lagged, but it's not losing its perception at all. And it should get stronger as we go forward. And Morgan Stanley and the others have also launched their ETFs around it, clearly indicating the demand for it.
Next question is about DeFi. The person here is asking about a DeFi portfolio in blue chip assets or protocols. Any rough estimates on how much it costs to insure a portfolio like that? We do use insurance from time to time. It varies a lot between different protocols. 5% could be reasonable for something that is very blue chip, I think, and been around for a long time. The biggest place to buy insurance is Nexus Mutual. So you can go to Nexus Mutual and check the insurance premiums if you like, but yeah, it varies a lot between different protocols, I would say.
Yeah. And the third question is around if the AI bubble pops, is it good or bad for Bitcoin long term or short term? That's a good question again. Bitcoin has been correlated to equities. So I think the AI bubble is actually the one that is driving the majority of returns in the US for the S&P and NASDAQ. And I think if there's fear in the market and people are issued margin calls because there's a lot of leverage and options that are also being traded, then in the short term, I think it will impact Bitcoin as well. There's no avoiding it. I don't think Bitcoin will, um, you know, decorrelate from Nasdaq or S&P. Typically higher beta Nasdaq S&P. So if the AI bubble has an issue, I think there'll be a lot of traditional funds and major indices dropping, but also Bitcoin will follow, I think. So the extent of the drop is to be seen. There were periods in history in the past where Nasdaq dropped 10% and Bitcoin dropped 15. And there were periods in the past where Nasdaq dropped 10% and Bitcoin only dropped 5. So it really depends on how much leverage is built into the system and how portfolio managers globally choose to de-risk and what buckets they pick. I'm more optimistic because of the lackluster performance of Bitcoin last year and crypto broadly, that we would have a more tempered drop in case the AI bubble pops. But to be seen. I think it's midterm years for Trump. And if anything, they will do everything to keep the party going because stock market drop is not something that he would like, especially in the midterm year.
This
And long
question
term,
also assumes that there is an AI bubble, which is, of course, debatable.
yeah, yeah, indeed. And also long term with AI, there are already many AIs that have self-concluded that transacting in Bitcoin or crypto stablecoins on Ethereum or Solana is far superior for the AI world in the future than using traditional systems, because traditional systems are siloed, they're not open, they're not transparent, plugs can be pulled out, databases can be wiped, all of those things. AIs, if you look at online, there are many AIs that have concluded that the future of transacting between agents and AI on the internet is through stablecoins on permissionless networks such as Bitcoin or Ethereum and Solana with stablecoins. So I think we're going to see more of that as well, and that narrative shape in 26, 27 on how AIs can talk to each other and pay each other and pay for services, and how crypto is the rails that was designed for it.
Yeah, that's a really good point. We got one more question from Gary. Can you comment on Apollo's fund under management during these turbulent times? That's a good question. I think in general, we have seen more interest in the market neutral strategies that we run through the market neutral fund and also the tokenized strategy. So that has sort of offset the lackluster performance in the directional funds. Or AUM is around 100 million, which sort of have shifted more towards the market neutral strategies in recent times. But that will shift over time with the volatility in the crypto markets. So I think that's pretty much concludes the Q&A. I think we answered all the questions, Pratik.
Yeah, I mean, if there's any other questions, please type it in the next 30 seconds. Happy to answer it. Otherwise, you know where to contact us. We're happy to answer privately on email or a call as well if you choose that mode.
Yeah, thank you everyone who participated in the webinar, and we hope to see you again at the next quarterly webinar after Q1. Thank you.
Thank you.